This is chartingwealth.com for Friday the 22nd of April 2016. It's good to have you with us. We are starting as we always do with IYY, which is a total market exchange traded fund. It tracks the whole market, and the whole market was down about 0.44%. If it was down 44% for the day, there would be blood in the streets. No, just little under 0.5%. We have a red open box down candle, means that the market is still above the 2-day trend line. Well, it's actually sitting right on it. We don't have a crossover going down on our 2-day chart. We had 3 prior candles representing 6 days of good up movement. We still have a good trend line that's not been violated yet. Our derivative oscillator looks like it gained a little bit of energy, barely a little bit throughout the course of the day. It looks like the derivative, the MACD and the signal line are a little bit closer. They're still riding very high. We'll see how much more strength there is to keep pushing this market up. There's still some room between the Bollinger Band at the top and the movement we still have potentially underway. Let's take a look at the 4-hour chart, see what we see there. We can see some down movement in the morning, more pressure in the afternoon. The market moved down a lot more and was pushed back up. Again, still closed well above the 2-day trend line. Don't have a crossover yet, but it could happen in the morning on that short chart on the total market. We'll continue to watch and see what we see. Now let's range back out on to our 2-day chart, and we're going to take a look at the S&P 500. It was down over 0.5% today at 0.54%. We see the derivative oscillator on the 2-day chart. Actually, it appears to have lost a little bit of energy. And the MACD and the signal line are a little closer together. Again, we're sitting right on the 2-day trend line. If we look at our 4-hour half-day chart for the intraday movement, we can see movement down in the morning and stronger movement in the afternoon. So we'll continue to watch. We're still above the 2-day trend line, getting close to a crossover going down. Did not verify a crossover going down on that short chart in the afternoon, but that may be happening. We're continuing to wonder just how long this up movement is going to be with us. So let's continue to watch, see what Friday has in store for us. Now, lastly, as far as our indexes go, then we're going to get to gold. We're going to go to the Qs. What's the Qs? Well, that's the Nasdaq 100. So we've looked already at the total market, the S&P 500. Now the Nasdaq 100 is represented by QQQ. What do we have going on there? Well, it again is sitting right on the 2-day trend line. We have the derivative oscillators losing most of its energy. The MACD does appear to be getting closer to the signal line. We still have confirmed uptrends on all 3 of our indexes on the big charts, which is what counts. In fact, if you remember earlier in the week, we thought maybe we were going to have a crossover going down when it got close, but it never crossed over and never confirmed and then went back up again. So we will continue to watch. Now, if we drop back and take a look at the 4-hour chart, what do we see? Well, we see the market has been sliding sideways in the Qs for quite a while, crossed over going down back on the 19th. Down movement in the morning, followed by similar down movement in the afternoon. Still above the 2-day trend line, but getting close to it. In the negative, have been since the 19th on this 4-hour chart. So we'll continue to watch, see what Friday holds for us. Now, lastly, we're going to take a look at gold, which was up as the markets were down. Oh, by the way, the Qs was actually up 0.01% for the day, so barely up, barely holding on. Now, gold down, it was up 0.38% for the day. Gold up 0.38%. It has actually been up the last 2 days. It's above its 2-day trend line, even though gold is currently in a negative on the MACD and also in the negative on the derivative oscillator. We do have this up movement over the last few days, but it has not yet been powerful enough to push over the derivative oscillator or the MACD. So we'll continue to watch. Now, if we look intraday What do we see the 4-hour chart doing? Well, it bumped up a lot in the morning on the 19th of April and then pretty much slid sideways since then. A little bit of up movement in the afternoon, down movement in the morning. We have the derivative oscillator is in the positive, and so is the MACD on the 4-hour chart. Just waiting to see if the big chart is going to roll over, going up on that MACD before we have any confirmed up moves in our standard way of calling things. If you remember, back before Christmas, we just used the 4-hour chart on gold because it was working so well. But that then let us down as the market started slipping sideways, and we haven't trusted it again. Maybe it'll come back to us. We shall just have to see. That is where we are as far as the markets ended on Thursday the 21st as we go into Friday the 22nd. Please, if you like what we do here, we do it for free. If you like what we do every day, a lot of work and energy goes into it. Please go subscribe to us on iTunes. Give us a nice 5-star rating. Say something nice about us. If you listen to us on YouTube, please, we love your comments. We love your high ratings. We appreciate your praise. The things we can do better, let us know. Thank you so much. Go to the website, chartingwealth.com. Sign up for our newsletter. You'll get these reports every day, plus our weekly review and forecast. Thank you so much from Charting Wealth.